Hey folks, welcome to the weekend technical analysis update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This weekend technical analysis update is for Monday, July 6th through Friday, July 10th, 2009. Well, what a wild day on Friday, folks. We'll touch on Friday. I want to look back at the last week. I also want to go forward to really touch on what to expect next week in the trading environment that is going to be after the July 4th holiday weekend. Now, many people are going to expect light volume. I concur with that. I think that's a wise thing to look for, and you have to be cautious because of that light volume. You had a little bit of a curveball thrown in there based on the jobs number, and I talked about that last week in the weekend technical analysis last weekend, and I think it was dead on. Exactly what I said happened, except the market did react, and it reacted negatively in a huge way. We had basically huge losses across the board. The Dow down on Friday 223 points. The Nasdaq was down about 49, and the S&P was down about 27 across the board. That's really basically 2.5 to 3% on the indexes, which is a big, big drop, as we all know. Now, you're looking at really Friday action right here. Here's Thursday action. Here's a little bit of Wednesday. I'll cover the whole rest of the week, but I just want to touch on how accurate we were last weekend in basically saying what was going to happen, folks. If you remember in last weekend's technical analysis video, I touched on how in usual situations you would see when the Friday of the jobs report, and I'm talking about unemployment and the jobs data and how many jobs were lost last month, when that Friday is closed like it was this Friday or this past Friday, you would see them push the data off to the next week. Why do they do that? Because there are more people around the computers, more traders at their desks, not on vacation. Whenever they don't do that, and in this situation they moved it up a day to keep it on light volume when a lot of traders are away from their computer, you have to understand that that's going to be taken as a little bit of a tip-off, and that's exactly what I said in last week's weekend's technical analysis video, was that you probably were going to look for a pretty ugly number off of that. That's exactly what happened, folks. And the markets reacted thus, and on very, very light volume. For that type of news, we got very light volume. It was actually okay volume considering it was stronger than most Fridays, but based on that news that came out, it was a very light day from what you would expect. As I mentioned, the markets plummeted on Friday. And listen, guys, I've been preaching this for the last 3 weeks to our premium subscribers. They've been privy to exactly what we've been talking about. We've basically talked about how every economic data that comes out is showing no sense of recovery, no green shoots, if you will, that Obama's been talking about, that Geithner and Bernanke have all been talking about in the economy. The only green shoots in economic data are inventory numbers. And I stressed inventory numbers you cannot go by because based off of the positive sense getting from the government and the Treasury and the Fed, you're having these people raise their inventories, buying up inventory stuff in anticipation of a recovery, and you're not seeing a recovery. So that's why you're seeing these inventory numbers. A lot of these numbers, goods numbers this, goods numbers that, inventory numbers here and there become better and better numbers over the last, month or so because that's what you've been seeing. People have been saying, well, if everyone's saying there's going to be a recovery, we're going to see a recovery, I better be prepared and load up. And that's not happening, folks. The jobs number, the housing numbers, mortgage applications dropping. It's just not getting better. Now, is that to say that we're headed back to the lows? No, absolutely not. We're not going there now anyways. Whether or not we go there in the future is another story. Could you see some continuation selling next week? Yes, it's highly likely. It's going to be one of those weird weeks next week because the volume should be very, very light, but at the same time, you're coming off some pretty ugly jobs data as we got. The unemployment rate went to 9.5, highest, I think, in 20-some-odd years. But really the key was, guys, how many jobs were lost for last month. Close to 500,000 again dropped. And if you take that and maneuver it for seasonality, it's actually worse than that. Usually you don't see see less jobs created or more jobs created based on seasonality and so forth. So it's a little bit of a skewed number in addition, which makes it even worse. All right, so listen, enough said there. Let's talk charts, but I just want to make sure everyone's aware this is what we've been talking about, guys. Again, if you really want to be privy to this, you got to join the Research Center. There's no other way to do it. I mean, I can update you in a flash type sense like this on the weekends, obviously, but if you really want to get in the trenches where you're going to know on a need-to-know basis based on exactly every day what's going on, you got to join that Research Center. It comes with every little bit of guidance that you can imagine. Picks, you have stock picks, you have all that stuff all in there, educational and guidance, all included in that Research Center for $49.99 a month. Can't beat it, to be honest. I mean, I've looked at other people's services, no one comes close. So, in any case, this is what's going on here, folks. You can see the gap down on Friday. Let's go all the way back to Monday. How did things look on Monday? You can see right here was the 29th. That was Monday. You had a little bit of a sell-off and then a rally on very, very light volume. Then the market went to sleep the whole rest of the day. Tuesday, big drop, then a sideways move up into the closes. They propped the markets up a little on extremely light volume. Then Wednesday here, you saw the markets gap up, move up, and then pretty much trade sideways the rest of the day and come back in. The markets closed nicely up for that day. And then obviously we know Thursday, which was the last trading day of the week since Friday the markets were closed, and you can see exactly what happened here. Gap down and just continued sell-off, and then really got into this sideways motion for the whole rest of the day. You had seen that a lot over the last couple weeks, guys. That's been a big part of what's been going on the last week, where really the movement happens in the beginning portion of the day, and then everyone else just goes to sleep. You can see no volume until the end, and when you got a little bit of sell-off, rebound, and then sell-off to close near the lows. All right, so again, you want to be aware of what's going to happen next week. You don't have a lot of economic news. I do believe Goldman Sachs does have earnings next week, and that's going to be a big deal, guys. I have a feeling they're going to blow the numbers out of anywhere. However, that doesn't mean the stock's necessarily going to go up, guys. All right, July 14th are earnings on Goldman Sachs. I believe that is on Wednesday, if I can confirm. That's a week from next week, not next week. So be aware of that. Next week, very, very quiet. Not a lot of economic news. A few different things will be coming out. So we're really going to be digesting on light volume the jobs number that we've seen, and people are going to start questioning the green shoots theories that have been pushed down people's throats. And I told you guys, and I've stressed this, what bothers me about that is that when you have government officials and Treasury and Fed officials saying green shoots, what it does when the markets are already up 40%, it creates the little amateur, the guy with his 401k, the woman with her 401k. They're buying at the top, and you can't do that. You're creating a negative environment where the small guy is always going to get hurt. That's why we're here, guys. I want people to avoid that so much. Can't stress that enough, but think about it. All right, who do you think's buying at the bottom there in early March? All right, high-tech traders that know what's going on, Goldman Sachs, JP Morgan, all the big funds there, they're the ones that are buying at the bottom. Who do you think's the last person to buy over the last couple weeks that missed the whole rally and have been now saying, well, everything looks better, the markets are up, it seemed green shoots. Who do you think's going to be buying there? It's the small guy, the guy that ultimately, when the markets do head back down or are heading down, such as Thursday, those are the guys that are going to be hurt. So I hate to see that. It's such a shame. But again, listen, I guess everyone has to educate themselves and be on top of things. You guys that are watching, you guys that are with us as premium subscribers, are obviously privy to that, and we'll do our best to continue to keep you updated when we think a pivot point is coming, when we think new lows or new highs are going to be made, and et cetera, et cetera. All right, take a look at this, guys. Again, what I just want to point out is next week you can see support levels here. All right, you're right really hovering on this 90, a little bit below 90. Your next level of support will go to the 60-minute. On resistance-wise, you're going to have a monster level right up here. Big level right up here. You have the 50 moving average on the intraday and this level. So right around $90.50 to $90.60 or so, a lot of resistance. After that, you're going to see the high right here. This is going to be gap window. That'll be a big point. That's at 91.10. After that, you'll have a monster level coming into play right up here. The 200 should slope down within the first day or so and be right in this level. That's 91.50. And then ultimately above that, gap fill would be up here at 92.30 or so. 60-minute charts, what you got to look for. These are our levels, folks. Look at how we closed right on one of our main levels here at 90.80. That's going to be support. If you gap down and go down lower, this is your next monster level, guys. Right around 89.50. 89.50 will be a big support level. And after that, you're going to look for double bottom support at around 89.85 or so at these lows going back about a week and a half, 2 weeks ago. This is going to be a major level right here, guys. Major level. So watch that for next week. If you start to rally, follow your 60-minute chart moving averages. Up in this area, gap fill and all that is going to be a monster point. All right, folks, again, I do encourage you to come join the chat room if you're an intraday player and you just want to continue to educate yourself. Also join the research center if you're more of a swing trade type, long-term investor type swing trader. That's where you're going to focus, guys. The research center includes about 5 different services, all insanely important to know. Education, guidance, and picks all included. It's fantastic. Talk to you soon. Enjoy your holiday weekend. Be safe, folks, and we hope to see you soon at InTheMoneyStocks.com.